Hello and welcome to another episode of the Uranium Market Minute. Today is Friday, February 25th, and this is episode number 83. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in. As always, before we get into today's video, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. What an absolutely crazy day in the uranium markets and crazy day in the world. Before we talk about our investments, I, of course, want to say up front, I sincerely regret what is happening in the Ukraine. The aggression that's coming from Russia, I think, is reprehensible. And I always stand with the people that are being oppressed in these types of situations. So my prayers are with the Ukrainian people. I hope that this resolves itself quickly and with the least amount of pain and suffering as possible. So I just want to put that out front that, as much as I'm pleased with how our investments are doing, this situation is not something we were betting on, and really are benefiting from it in kind of a backwards way is something that we were not expecting. So I just want to add that extra disclaimer up front that while I'm very pleased to see our investments do well, and with this unique situation in terms of energy security, energy crises, et cetera, I'm not happy with what's going on over there. So I want to say that up front. This was a crazy day for uranium. In fact, a crazy couple of days, and a pretty significant week for the uranium market. I think when the markets opened up yesterday on Thursday, the 24th, I think we were all ready to just get killed. We were ready for just the markets to really beat us down. And we saw significant outperformance yesterday in the uranium stocks, which is why I titled yesterday's Uranium Market Minute video. When the market gives you a tell, and I talked about that yesterday, that was a tell. Seeing the spot price firm up, seeing volumes come in, seeing an outperformance when almost everything on the screen is red and you're seeing green, there's a reason for that. And it's important to take note of that. And, the market gives us 4, 5, 6 days a year like that you really need to take note of. It's not always in a bullish way, right? But in this particular case, it was and is. And we saw some pretty significant follow through today, which we'll get into in just a moment when we look at the charts. But let's fly through the scoreboard here. We'll look at the charts, which is pretty astonishing. And I'm going to talk about SPUT and flows and things like that in the mailbag section. So starting off with the spot price of uranium, up over $3 today per pound at 46.50 a pound mid-market. That's a very large move for the spot price. That's the biggest daily move we've seen, I believe, since September. So just really, really big stuff. SPUT raised yesterday another 41.7 million. They purchased another 100,000 pounds of U3O8 yesterday. So their year-to-date total is coming in at 4.8 million pounds of uranium year-to-date. That's about 7 weeks, and 268.5 million of capital raised. At this rate, they're going to blow out our conservative estimations. Now, our expectations are actually not that conservative. We expect that we'll see a very, very large amount of uranium purchased by the financial players, in particular SPUT this year. Our modeling is more conservative. We're modeling out for SPUT to purchase 25 million pounds this year, and I think that they're going to blow that out of the water. Taken a lot of flack for that estimation, and I stand by it at this point. And so far, if you annualize what they're purchasing now, we're looking at 35 to 40 million pounds for the year if they keep it up at this rate. Of course, as the price rises, they can purchase less with the same amount of capital, but either way, we think those capital flows will increase, especially towards the second half of the year. But what an astonishing week, and what a huge day for SPUT with record volumes. They closed yesterday at a premium to NAV of 1.84%. If this is your first Uranium Market Minute video that you are watching, the Sprott Physics Uranium Trust needs to trade at a greater than 1% premium to their net asset value. So essentially the value of the uranium they hold based on the current spot price. And if the trust itself is trading at a price that's greater than a 1% premium to that value, then they can issue shares into the open market via their at-the-market financing vehicle, their ATM. And they do that basically whenever they're at a 1% premium to NAV. And on big volume days like today, you can expect that they were 50, maybe even up to 60% of the daily traded volume. They were there on the offer. So when the buying pressure is heavy coming in, they are there on the offer with 50 to 60% of the shares that were traded So today we're looking at somewhere between 5 and 6 million shares issued to raise money. So it's likely they've raised somewhere to the tune of 75, 85 million dollars Canadian today, which is just absolutely huge. So yeah, annualized, that's just an unbelievable number. But of course, today was a bit of an anomaly with the amount of volume that came into that vehicle. So they, as of the open this morning, SPUT had 79.6 million in cash. So they have about 50 million in excess cash over that reserve. We figure they'll hang on to cash around that $30 million mark just to kind of keep a bit of a buffer. They're not gonna burn that down to zero, buying just a little bit of uranium. But on days like today, when they can come in heavy, it's likely, if we assume they purchased no uranium today, which I'm not assuming, I believe that they actually did, but they would be sitting on somewhere around 150 million in cash. So they now sit on 46.1 million total pounds of uranium, have raised $1.25 billion since last August. Their NAV asset value is now over 2.1 billion. Absolutely huge. They're getting close to 4xing the NAV of the UPC when they took it over last July. The ETFs, URA actually reported 50,000 shares of redemptions. However, URNM issued 100,000 new shares. That combined equal to mandated amount of buying of 5.8 million, and again combined a new all-time high in outstanding share counts between the two ETFs. Again, this is not retail. This is not the actions of retail. When sentiment is low, retail does not pile into ETFs. So we reiterate that we believe what we've been seeing is smart money positioning in the ETFs over the past month and a half, 2 months. Let's go ahead and take a look at the charts here. Starting off with URA, very nice follow through today. We actually sold down slightly throughout the day, end of the day up over 4% on respectable volume, printing a beautiful hammer candle on the daily with a strong week as well. The week up almost 9%, just absolutely beautiful, beautiful bounce off of that trend line with good volume to boot. So very pleased to see this trading action in URA. URNM looks similar. Let's look at Cameco. Cameco, again, beautiful follow through, hammer candle, good volume. After a huge day yesterday, to be up another 2.5% today on respectable volume is very, very good to see follow through. Look at how tight these moving averages are for Cameco. All of them now pointing up as they concentrated over the past couple of weeks. Beautiful, beautiful back up above that 200-day moving average. Very, very nice looking bullish chart. Make sure you're sitting down as we look at the Sprott Physical Uranium Trust. This is an absolute textbook breakout. Okay, this is what we want to see. So this, I don't know what you would call this. This sideways consolidation. It's almost like a bull pennant. It's sort of a symmetrical triangle. Either way, we knew this was a coiled spring that would break out at some point. We believed it would break out in the direction of the previous trend, which of course was up. And it did exactly that. Now it broke through yesterday on increasing volume, as we can see. And then today it pulled back perfectly to that trend line and then just took off absolutely up on stilts, up 7.3% on the day for U.UN. And of course, we will note the record volume here. This is huge. This is absolutely huge. So very, very good to see this. The indicators, again, the RSI just absolutely took off the last 2 days. MACD just getting warm here. So let's see if we see some follow through on this chart in the coming days and coming weeks. So the mailbag section, I want to talk about the volume that we're seeing in SPUT, okay? So basically, as I mentioned earlier, SPUT raised almost 42 million yesterday. They were only able to acquire 100,000 pounds. They ended the day with nearly 80 million. As of the end of the day yesterday with nearly 80 million. Now we believe that they issued somewhere between 5 and 6 million shares on their ATM today. So it's likely they're sitting on close to $150 million. Now, considering that they probably keep about 30 million in a cash reserve, that means they have the cash to buy somewhere to the tune of 2.5 to 3 million more pounds from the spot market. Be very curious to see if they did any buying and how much they did today. Judging by a $3 move in the spot price, it's likely they were in there buying something. Well, it's yet to be seen how much they actually bought today. So that type of volume, what was really noteworthy was in the first 30 minutes of trading today, there was a flurry of what were clearly large institutional orders buying SPUT, traded almost 7 million shares in that first 30 minutes. Okay, that volume dissipated in the middle of the day. Seems like folks kind of took a lunch break. Then it came back and just surged towards the end of the day with the trust adding, it was up almost 50 cents plus close to $1 in the last hour of trading. Just really, really big moves for SPUT. This is yet another indicator to us that the uranium bull market is potentially about to resume. In fact, I would say it is already resumed. And of course, it'll be interesting to see how these large buy orders will impact the market. Now, what's interesting is the movement of the spot price. So as SPUT has purchased 4.5 million pounds, roughly a little bit more than that year to date, they came in with some pretty heavy days back in January, purchasing 200,000, 300,000, up to 500,000 pounds. I think one day they even purchased a little bit more. I believe, if I recall correctly, they purchased over 1 million pounds on one day in January. Either way, substantial buying with not a lot of movement in the spot price. And why is that? Well, there's always some production coming into the spot market, right? That's coming from Orano's trading house, UG. That's coming from BHP. That's coming from Uranium One. That's coming from the Uzbeks. That's coming from a number of traders that get offtakes, et cetera, et cetera. But it's not a lot of volume, right? It's maybe at 1.5 to 2, maybe 2.5 million pounds per month from primary production that gets sold into the spot market. I think 2.5 million pounds is probably on the high side of primary production, mind you. That's not actual pounds coming from elsewhere. As I've mentioned in various market minutes in the past, there's something called carry trade. Carry trade is essentially where a trader is contracting out future delivery with a utility and then seeking those pounds out somewhere in the open market, often from the spot market. So a carry trader will do that. They will carry those pounds on their books. They will add the cost of storage of that uranium, the cost of capital, bake in their profit margin, and make it a one-stop shop and an easy deal for the utilities. This has been a boon for utilities and for traders for a very, very long time. A good part of the last decade started to dissipate a bit as the market got a bit more complex over the last year, maybe 2 years. But still, it's still a substantial means of acquiring uranium for the utilities. And a big player really in the uranium fuel markets are the carry traders. They kind of got a bad name from a number of the producers, especially producers like Cameco, who, has been wanting the price to rise and utilities to come back to the term market with Cameco specifically, because they're incurring such high costs to keep McArthur River on care and maintenance, something to the tune of $8 to $10 million a month. And they've been doing that for years. Okay. But of course, the utilities aren't going to come in and voluntarily pay these way higher prices when you can get pounds from the midterm market from a carry trader at present market costs plus the cost of capital, interest rates, et cetera, and pay just over the spot price for midterm pounds. Why would you go ahead and go to Cameco and say, okay, we'll voluntarily pay, 40, 50% higher than what the market was 2 years ago, just to appease your contract book and get you closer to bringing that mine online? Well, that's not how the utilities work. That's not how fuel buyers work. They're incentivized essentially by their own management to do the best they can to source fuel for their operating plant at prices that work for them. Okay. So that's a long-winded kind of backstory to say that there's a significant amount of pounds that are held in carry. These carry traders are holding on to pounds that are promised for delivery to a utility at some point in the future. How much pounds are held in carry? Nobody exactly knows, but there's plenty of numbers that are thrown out there. Like I said, on the low side, you'll have somewhere maybe around 8 to 10 million pounds that could be shaken out in this reverse carry trade, which I'll explain again in just a moment. On the high side, maybe we're looking at 25, 30 million pounds that are held in carry. How much of that can actually shake out? That really depends on, a number of factors. That depends on cost of capital. That depends on the depth of the midterm market. That depends on the price of the midterm market. That depends on interest rates. That depends on currency arbitrage. All these factors, right? That depends on the timing of delivery for those pounds held. All of these different factors affect how much of those carried pounds can actually shake out when we have a backwardated market. Backwardated market is what? That is when the present price is higher than the forward curve. So if the spot price is now at 46.50, and in theory, a trader could sell his or her pounds into the spot market at 46.50 a pound, and then secure pounds in the midterm curve to cover their delivery at $44 a pound. They made it instant profit, right? And they added $2.50 to the profit they already baked into that carry trade. So really what's happening, in my opinion, as we're looking at the spot price movement today, is that I believe there was significant buying pressure in the spot market that likely was largely coming from SPUT. But of course, with what's going on in the Ukraine, with Russia facing various forms of sanctions and also being a primary supplier of uranium worldwide, right? So they supply a significant amount of enriched uranium and enrichment services to the global uranium market. And so Russia being impacted in any way with sanctions could actually affect the uranium market substantially. Now, they might not actually have to have sanctions against Rosatom, against Uranium One, against 10X, et cetera. You might actually have capital risk. So let's say one of the midterm suppliers has primarily been either Kazatomprom, or more specifically, let's say Uranium One, which has a number of joint venture mines with Kazakhstan. Okay. And they've been, Uranium One is a huge player in the uranium market. They are a spot seller, but they also contract. They also have mid and long-term contracts. Let's just say, in theory, that Uranium One is a potential supplier of midterm pounds. Now, what if the borrower, let's say the trader that would be looking for those midterm pounds coming from Uranium One, could not get access to capital, and maybe at rates that would work to unwind those carried pounds because of the risk of this area. Now, it doesn't have to be actual sanctions. It could actually just be capital risk. That could be playing a factor here. So what it seems to me is possibly happening is that either the midterm market is moving up in price, which those price reports are less visible than the spot price. Those will come out on a weekly basis from the primary consultants, so the UXCs and the trade techs of the world. And for paying members of UXC's weekly reports, you'll get reports on what's going on in the mid long-term markets. But until Monday, essentially, it's difficult to understand exactly what's going on in the midterm market. So it's either the midterm market is moving up and in line with the spot price, therefore not allowing a backwardated situation, and or the midterm is tightening up. Maybe those pounds are not as available. Maybe there's some capital risk, et cetera, et cetera. Something's happening here that the spot market is thinning out, because as we saw even last month, purchases of 500, 600, 700, up to 1 million pounds in a single day over the course of a couple of days didn't really move the price, and now it is. So something has changed. That's another tell. Something has changed. Volumes coming into the spot market. We also could see more players coming into the spot market. That's also a possibility, and we will find that out in short order. If there's pressure being put on the spot price coming from quote unquote end users, which could be utilities, which could be traders, but of course also SPUT and any other financial players. So it's a very complex scenario, but that's what we're seeing. We're seeing that something has shifted here. And it very likely has to do with what's going on in Russia and Ukraine. This is not something, again, that we are celebrating. This is not something we are trading around. We have our own theses that we stick to for a long-term basis that has to do with obvious, basic supply and demand fundamentals. And of course, this growing theme of energy security with energy crises in multiple countries around the world. And it's just heightening currently with the situation in Europe. So this current situation in Ukraine seems to be accelerating this potential situation in the supply and demand that we have highlighted for many, many months and even years at this point. So hopefully that helps to understand a bit more what's going on in the markets. And of course, those volumes were insane in SPUT, record daily volumes. And it's really good to see a lot of the gains from yesterday across the space be held today, and see even after large days of 6, 7, 8, 9, 10% gains yesterday. So for a number of the stocks in the space, they were up yet again today, even if a smaller amount. Just to have those gains hold on is a really good sign, and yet another tell. So, all right, on that note, be well, prayers to the Ukrainian people. And I hope that you enjoyed this video, and hopefully this helps to clear up anything that's going on in the markets. And have a great weekend. We will see you all on Monday. Cheers.